So emergency fund was the first one.
Yeah.
What's next?
I would say emergency fund first. Then I would go 401k because you're working full time. They got some free money laying around for you. But then after that, Roth IRA, having some money put into a Roth IRA because you want to be able to have something tax free when you get older. And then after that, I would say brokerage account. So it would be emergency fund, 401k, Roth IRA, brokerage fund. So I'm hitting them.
Okay. What's up, my FY Fly folks out there? How y'all doing? I hope y'all doing all right. Welcome to the FY Fly podcast. My name is Hassan Thomas, aka the kid that did and the man that can, baby. And today we're gonna be chopping it up with financial coach, investing guru, and the founder of Financially Present, Mr. Mawuli Vodi. How are you? How are you, brother man?
Brother, I can't complain. There's a lot going on, getting ourselves ready for the holiday season and just work and all of these different things. But I'm blessed. That's all I can say. I'm doing well. So I appreciate you bringing me on.
Of course, man. You know, we originally met at FinCom, but now we're here on FY Fly. And you know what we like to do? We like to skip the fluff and get right into the good stuff, man.
Okay. That's what's up.
So I want to know, bro, were you always good with money, or was there like a turning point in your life where you were like, okay, now it's time to get right?
You know what? What's funny is I think all the people that know me personally, like my wife and my sisters and all that, they'll say that they'll say that I was cheap. So money was always something that I thought about.
We was frugal, brother. We was frugal.
Or somebody like to say fiscally responsible is what we like to flip it on his head. But it didn't come from much, and didn't get a lot of what I wanted growing up. So I felt like I had to hold on to money at times when I finally started picking up some things. And I think it came in waves as far as just being conscious about money, from being an economics major at school to becoming a stockbroker, and then to being a father with kids. Like, there's different levels to how conscious you are. So you went
straight from college to being a stockbroker?
Exactly. Yep. Yeah. I spent nearly a decade as a stockbroker.
How was that transition from going college student to real deal stockbroker, helping people with millions of dollars? Like, how was that transition for you?
It was a great learning experience for me. And the reason why I got in the industry is because I didn't know enough. So I was like, man, what's the best way to figure out something about investing? And I'm one of those people that I just jump in with both feet. So I found an internship at a brokerage firm, and that was my senior year of college. And I was like, well, seems like this is all right. Let's try and hop on full time. And I had a 5-year plan. I stayed there much longer, but it taught me everything that I needed to know about investing, because I had a front row seat, speaking to people on the phone every day, hearing their issues, seeing their trading styles, especially just how aggressive people can be or how conservative some people can be. So I learned a wealth of information, and that really helped transition into other phases of my life, because for me, I was hyper conscious about money. We talked about being cheap or fiscally responsible, but seeing how people behave with money helped me be a little bit more relaxed with taking some risks, and taking bigger risks than my parents did in a kind of different way. They took some risks for sure, but for me, mine is more tailored towards investing.
Okay. So even jumping right into your investing bag, say for example, a college, high school student, they walk up to you and like, why do you invest? Why do you put your money into the stock market? What's the point? How would you answer them?
I feel like investing is a minimum. You have to invest. And investing is not like one style or one thing, because I think of investing from, of course, the financial perspective, because that's just me, but then also the growth and the internal development perspective as well, because I found myself evolving throughout the industry and wanting to do different things, and eventually like migrated to different certifications and different ways to improve myself, because things are constantly changing. And for me, I realized that inflation is not something that's just here and then it's gone one moment. It's constantly here. And we have to find a way to battle that. And that's why it's so important to invest. at all times. The degree to which I remember for the internship itself, I borrowed my girlfriend's car to get there. And then when I
Wow.
got the internship, I was just taking the bus from
Mm-hmm.
campus, taking the bus and then going into the office. And uh, they were like, if you're in the industry, you got to start investing. So open up an account, didn't have anything, start putting a little money in there, buying some
Yeah.
stocks. And by the way, when I started in the industry, it was 2008. So that's when everything was as exciting as it would ever be. But
Yeah, because everything was super low, right?
exactly. But you
Wow.
got a college kid here that's in the industry or getting into the industry and doesn't have a dime to his name, really.
Mm-hmm.
So in my mind, I'm like, man, I wish I learned about the market at least a year earlier, and I probably would have been in a better position to take
Mm-hmm.
advantages of things. But I was using just little bits of money here and there and just trying to like build it up, with whatever
Yeah.
style of investing. And I was learning as I went.
Mm-hmm.
Yeah,
Building that, we like to call that building a plane while you flying it, brother.
exactly. Yeah.
So, not as you mentioned, not necessarily financial advice, but what are some starter investments that you think beginners should definitely look into?
Mm. And not finance related.
Not necessarily financial advice like, hey, everybody listening to this, you need to invest into this, and this, but just like what are some good general starting investments that people should consider?
Oh, right. I would say, as far as starting investments, you have to understand exchange traded funds, so ETFs. As
Yes,
you've probably heard of
sir.
them. To me, that's the best thing since sliced bread. And being in the industry, I'm like, man,
I
you can
love
get
those.
anything you want. You can get anything you want in the form of an ETF. And if it's not there yet, at some point, someone's going to make it and you'll be able to buy into it because it cuts down on research time, cuts down on the risk, and it increases your exposure to other investments. But I will say it's important to understand stocks and mutual funds because those lead you into understanding ETFs even better. So there's
Gotcha.
definitely levels to it, but at the same time, too, if you want to just fast forward to the actual answer, ETFs, hands down, are the better investment to start with and
Hey,
finish with.
hey, I am right there with you, bro. When I first found out about ETFs and like the total world funds where you could own
Hmm.
like every company in the US and then you could
Yeah,
own every company outside of the US, I'm like, bro, this gotta be too good to be true. Ain't no way with one play you can own every public traded company
everything.
in the US. I'm like, that is crazy to me.
Yeah.
So I'll tell you a quick story, bro. My dad, he gave me a stock investing book for Christmas
Mm,
my sophomore year. So it's like the end of my
good.
sophomore year. And I went through the book and I found some stocks, found some individual stocks, and this was my first time investing. And I made the investment, gave it about, 3 months, wasn't doing nothing. 6 months, wasn't doing nothing. About 9 months come around, I'm like, okay, why am I not rich yet, bro?
Uh,
I'm like, why am I not rich yet? I thought you invest money and then you get rich. But man, I eventually took a what was it called? What was it called? Investing analysis class my junior year.
mm, good.
And she had three rules. I can't remember the third one, but the first one was investing early and often, and the second one was to invest into a group of stocks compared to individual stocks. So
Correct.
that's where we're talking about with the ETFs, with the index funds, with the mutual funds. Those are pretty much group of stocks compared to individuals. So do you think individual stocks are a good play at all? Or like should we just stick with group of stocks, ETFs, and things of that nature?
Right. And I'm glad you mentioned that too, because I personally like individual stock, but that's not going to make up the bulk of my portfolio altogether. When I consider it
Mm-hmm.
a portfolio, I'm looking at 401k, I'm looking at the Roth IRA, the joint account, and
Yeah.
all of those things all together is what I'm looking at when I talk about portfolio. Um, I like to say that individual stocks, you know, let me take a step back because when I cook, I like to cook, but
Yeah.
sometimes I like my portion a little bit spicier than what I would prepare for the kids, right? Actually, my daughter likes spice too, but
Yeah.
I might set something to the side and then I'll put some cayenne or whatever on it. But at the same time, too, not everyone likes it like that. And I think investing is a similar way because for
Uh-huh.
me, having an individual stock amongst the other diverse investments like ETFs and mutual funds, to me, that enhances the portfolio. I'm not going to be buying
Mm.
individual stocks that are going to, I don't know, not sweeten the deal for me or not make this dish taste better. So I have to make
Yeah.
sure that it fits, but I think it's good for my risk appetite. Like it helps
Yeah.
me enjoy investing a little bit more if I know I can go out and just,
Mm.
get a share of that company here and there or get, you know, 10, 20, 30 shares of that company. And it'll kind of
Mm.
change the allocation according to what I like. But that's not everybody. And
Mm.
so not everybody's built for that. Not saying much about me, but it's more of when you've been in the industry long enough, you start to build some of these calluses, I'd say. You get used to the ups and downs. So
Got you. So those individual stocks that you personally hold, you don't have to tell me which ones, but the ones that you hold, the individual ones, are they more blue chip stocks like that you know are going to be around forever? Or are they, I would say, undercover stocks that could pop and have a huge return?
gotcha. For me, most of them are going to be blue chip stocks, because it does allow me to know that hey, these are long term holds.
Mm-hmm.
I'm not a day trader by any means, and I don't seek to be one. But I do think that hey, having diverse holdings in ETFs and mutual funds, and then enhancing it with additional blue chip individual stocks,
Mm-hmm.
it amplifies some of the benefits of your portfolio. You still have to watch things, but if it's blue chip, you can trust it a little bit more or a little bit
Mm-hmm.
longer. But any of my individual stock plays are usually long term buys.
So I want to get your thoughts on this as well. So if we were to go in order from like the most important or like the must have, kind of line this up for us, like picture this for us. So a
Okay.
Roth IRA, a 401k, a brokerage account, and an emergency fund. Out of those four, which one should we do first?
First, you definitely have to do the emergency fund, in my opinion. That
Okay.
emergency fund, and I didn't do it when I first started investing, and I found myself like just second guessing all of my investments, right?
Mm-hmm.
And it wasn't that I was investing money that I didn't have or money that I needed at that moment, but if something did happen, that's where I would pull it from. I didn't have an
Gotcha.
emergency fund kind of set up. It was, again, I was in college. But if you have that emergency fund, something that, covers a little bit more than just, one or two emergencies, I would say, then
Mm-hmm.
that gives you some comfortability to take on some risk and you can be a little bit more flexible because when it comes to investing,
So emergency fund was the first one.
yeah.
What's next?
So if it's I would say emergency fund first, then I would go 401k because you're working
Mm-hmm.
full time. They got some free money laying around for you. They've already budgeted
Okay.
this.
So
That's
do that
why you
match.
want it
You're a fan of the
at
match?
least. Yep, yep. And I actually prefer people go over the match. So I think people say if they're matching only 4%, only do 4%. But depending on people's tax situation, the more they contribute to a traditional 401k, then it reduces their taxable income, right?
Mm-hmm.
But then after that, Roth IRA, having some money put into a Roth IRA because you want to be able to have something tax free when you get
Yeah.
older. And even if it was like, man, you only had one good year, you put in 2,000 into a Roth IRA, but you happen to buy that one stock that just took off. At least it's tax free in the future, right? And then
Gotcha.
after that, I would say brokerage account. So it would be emergency fund,
Mm-hmm.
401k, Roth IRA, brokerage fund. I'm hitting the mic on
Okay.
you.
Bet. That's no, that's good. That's good game, bro. That's good game. I appreciate you for breaking it down like that. Cause that's what we need, man. Like all the information is great, but we need actionable advice, actionable tips. Okay.
Right.
And then we can't have you on here, man, and not ask our famous final question. I'm gonna say two quotes, and I need you to let me know which one is more accurate in your opinion. All right?
Okay.
All right, bet. So the first one is more money, more problems. Shout out to Biggie. And the second one is money can't buy happiness. Which one do you agree with most?
I got to go with money can't buy happiness, right?
Okay,
Because
why is that?
in my opinion, there's going to be I mean, I feel like everyone kind of has like a dollar amount or a dollar figure, but well, maybe not everyone, but more people have a dollar figure or a set dollar amount, but they don't have like a list of everything that they want to do that's going to make them happy. And I know for me, a lot of my happiness is not tied to just a certain dollar amount that I would have. It's more about the time, and it's it's more, it's not about money, it's more about the time. And it all makes sense when you see how I spend mine. So
Yeah.
I decided to steal it from Cole. But at the end of the day, like for me, I have a lot of fun with my kids and my wife. We go to their sports and things like that, have time on the weekends, we chill, family game night, all of those type of things. And like being able to just spend a little bit more time with them than my parents had the ability to spend with me. Like to me, that's big, and building the relationships and understanding like, okay, something's a little off with them, or they, or they're feeling this type of way or whatever. But I
Yeah.
know that just having more time to do stuff, because time is, we already know it's finite. We don't have enough of it. We don't have a grasp of how much we have. So it's like, that's literally all we have, you know?
Facts.
So for me, I mean, money can't buy happiness. Time can.
I love that, brother. I love that, man. Thank you so much for joining the FY Fly podcast. If you have any final words, any final takeaways, go ahead and also let them know where to reach you, bro.
Appreciate you for having me on, man. We connected really well at FinCon, so I'm blessed to be able to meet you, talk to you, and even be on the podcast. So thanks for having me. At the end of the day, if you're looking to find some beginning investment education, that's what Financially Present is here for. I'm an author, a public speaker, educator, but also a father and a husband as well. So when I share information with people, it's because I'm sharing it with you as if I'm family, basically. And the way to find me is on www.financiallypresent.com. I'm on Instagram. I'm on TikTok. I'm on Twitter as well. But all of that can be found on financiallypresent.com, or you can always email me at info@financiallypresent.com.
Yes, sir. Yes, sir. And for all our listeners, I know we dropped a lot of great gems here today. So if you can take one or two small gems and implement them today, then I promise you, over time, they will have large results compounding over time. So thank you again, my man. Everybody listening, y'all already know. Stay safe, stay invested, and stay FYI fly. We'll see you next week.